This is precisely the reason why we've been saying that Bitcoin is heavily impacted by macroeconomic conditions. Bitcoin is in the middle of another powerful rally, similar to what we saw during the past cycles. In 2017, 2021, 2023, 2024. With the price now nearing $120,000, Bitcoin has once again delivered extraordinary gains, leaving investors with remarkable profits. Looking at this chart, Bitcoin doesn't move in isolation. Since 2019, it has consistently tracked in lockstep with the S&P 500, and that makes it sensitive to the same forces driving the stock market. The most obvious link is volatility. The green line is the VIX index. Whenever VIX spikes, hedging, demand surges, and risk assets like stocks sell off together. Bitcoin has proven no exception. The popular claim that Bitcoin thrives in crisis or war simply does not match the data. Bad macro conditions and volatility shocks have repeatedly hit Bitcoin negatively, just as they hit stocks. Both the S&P 500 and Bitcoin are in logarithmic scale. VIX is the market's fear index, derived from implied volatility on S&P 500 options. It measures how much protection investors are willing to pay for against near-term downside. When VIX jumps, it tells you investors expect stress, and that stress usually comes alongside forced selling across all risk assets. In March 2020, VIX printed approximately 80, and S&P 500 collapsed -30%, and Bitcoin was dragged down too. The idea that Bitcoin should behave as a hedge in those moments has been disproven by its own performance. Both equities and Bitcoin rise during low volatility, risk-on regimes, and both get punished when fear returns. Also, keep in mind, we're not saying this would be the long-term driver. The VIX index simply serves as a local influence. The global trajectory of the trend of both assets are given by something different. In the long run, Bitcoin behaves in a cyclical, predictable manner, because its fate is bound to
As you know, we
economic
don't
growth.
usually focus on technical analysis. However, if we take a look at the Bitcoin price in this chart, we'll notice there's a clear pattern forming between these two bands, a resistance level above and a support level below the current price. These lines are based on a simple, linear regression that highlights the relationship between price and time. The pattern appears to behave like this. The long-term trend forms an almost perfect straight line, with periodically repeating bubbles that rise sharply above it before cooling back down. Each of these bubbles mirrors the same kind of overheated behavior we could see in broader financial markets. What's remarkable, though, is the regularity. These speculative surges and resets occur with a periodic rhythm, almost as if Bitcoin's growth breathes in cycles, expanding rapidly, contracting, and then resetting itself to the same steady upward trajectory over time. Based on this pattern, we can make a few reasonable assumptions. If Bitcoin continues to follow the same long-term trend, its price could reach around $1 million sometime between 2028 and 2037, and after that point, it is unlikely to fall below that level again. Considering the current price of roughly $120,000, that would represent a massive move, nearly 10 times higher price from the current level. In our view, the most realistic point along this trajectory would place Bitcoin near the $1 million mark around the year 2033. If we look at the charts, the amount of money in the US economy has exploded since the 1990s, from around $3 trillion to about $22 trillion today. The same thing happened in the euro area, where the money supply grew from roughly 2 trillion euros in 1990 to about 15 trillion euros by 2025. In Japan, it went from around 500 trillion yen to over 1,200 trillion yen. Basically, central banks everywhere have been pumping more money into their economies through things like quantitative easing. This huge increase in liquidity has a big impact on both consumer prices and stock market values. You can see it clearly when you compare the global M2 money supply with the S&P 500. But when we put Bitcoin's price next to global liquidity, the correlation is crazy high. Whenever central banks pump more money into the economy, Bitcoin tends to rise. And when liquidity tightens or stops growing, Bitcoin usually slows down too. That's why it's fair to say Bitcoin is strongly connected to central bank policies around the world. In a way, it seems like Bitcoin was built to react to these big macroeconomic shifts. Central banks will keep creating more money over time. And that's fine, as long as it's tied to real economic growth. In the chart, we can see that the 2021 bull run came right after a big injection of liquidity into the global economy. More money could be spent, and more money was spent on a variety of goods or investments. Global liquidity has just reached a new all-time high. Since this trend looks set to continue, we expect Bitcoin's strong growth to keep going as well. But if global liquidity were to tighten, we'd likely see demand for Bitcoin drop and the price correct accordingly. So to wrap it up,
we can add the second major force and complete the picture. Volatility works the same way it does in equities, while the long-term trend is driven by the overall expansion of money. There you have it. None of the information provided should be considered financial advice or an investment recommendation. Our goal is serving you the best educational content. Thanks for watching. This is Glenaius.